Hello everyone and welcome to Infonox Market Insights with me, Richard Perry, analysing markets for Infonox on Friday the 21st of January. Now, the selling pressure that we've seen through Wall Street in the early part of 2022 has continued. Key support levels have been breached on the SP 500 futures, on the NASDAQ 100 futures, and the markets are continuing to fall. They had a big sell-off into the close last night, and that is really impacting on European markets into today's session. And we can see that through Forex majors as well. The dollar is starting to find support again, and that is coming at the expense of other higher risk and pro-cyclical currencies such as the Aussie and the Kiwi today. And the Japanese yen is the big outperformer on the session so far. So how markets respond to these breakdown levels are going to be the important next step. Old support becomes new resistance. And that's the key feature of what we're looking at on equity markets at the moment. Now, today's session, there's not a great deal of data to look out for the US, certainly to change that phase of selling pressure. A little bit of UK retail sales, which came in underneath expectations, missed expectations there, so not helping to add to that theme of risk negativity. Now, the charts we're looking out for today, I'm looking at Eurodollar, which pulled back yesterday but has started to find support again this morning. Is that sustainable? Also looking out for the gold price, precious metals finding support in recent days from this risk sell-off, but can that continue? But also looking out for this big breakdown on the S&P 500 futures. Is this going to continue lower? Let's have a look. And onto the Infonox MT5 platform, and kicking off with Eurodollar. It's drifted back again towards this uptrend channel. That it's a shallow uptrend channel, but there is a definite trend that we have in play here. And the market's come back towards that support today, found support at the channel low and rebounded slightly, but is that a sustainable move? Yesterday's candle, well, that's it's not a positive one, certainly, in closing towards the bottom of the session doesn't help that sentiment. So this key reaction that we've got this morning, a little unwinding move on yesterday's selling, but is it sustainable? Looking at this 4-hour RSI, the momentum is still negative, and it's could be a case of just unwinding into resistance and then falling away again. So this is a really key moment for Eurodollar, how that market responds to this rebound. At the moment, it's just coming back into sort of resistance of old support that it had through yesterday's session before the sell-off. So that resistance starts to come in around that 1335, 1340 area. The key level of resistance overhead is this blue band here that we've got, that I've had highlighted for several weeks, really. The old breakout level of 1360 to 1385. That is the key level of resistance that I'm looking out for yesterday. It hit that resistance and fell away. So that is an issue, certainly for Eurodollar. But that key level of support around 113 big figure, if you see it trading in the 112s, that's not ideal, certainly for potential downside break and further lower moves. So the gold chart is interesting because it broke out earlier this week on Wednesday and held that break. It looked to be moving positively yesterday, but pulled back into the close yesterday and sort of formed a slightly negative candle, a very small candlestick body, so nothing too decisive, but certainly this is in consolidation mode. So obviously we've got the risk negative side, which is supportive for precious metals such as gold, but you've also got the dollar, which has started to strengthen again. So that's sort of why gold is consolidating. But the breakout of 1828, 1832, key support now. How the market reacts around that is going to be really important, I think. Initial support at 1836 area. So again, that needs to hold initially, but now the market will also be looking out for 1846 as a key level of resistance overhead, because if it can't break through that, then it could well be that this was a false upside break. Below 1828, you're looking at a retreat once more. And finally on S&P futures, well, this uptrend channel, the primary uptrend channel that S&P futures has been in for over a year, has been decisively broken. But also looking at one more level, you can see this has now completed a big top pattern. Oh dear, that doesn't look ideal, does it, for anyone who's long of S&P futures? 4260 is this key basis of support, and it looks like on a medium term basis that could now be a target. And how the market responds to this breakdown at 44.91 area old support becomes new resistance. So you've got a near-term unwinding move, near-term technical rally this morning. But again, that is key resistance now overhead, 45.25, 44.91 to 45.25. Really important levels of resistance now. How the market reacts around that will be crucial as this unwinds into resistance. The support comes in at that 44.60 area now. Thanks for watching this video. I hope you found it informative for your trading. I'll be back on Monday where I'll be looking ahead to a crucial week with US inflation, growth data, and obviously the Federal Reserve as well. So I'll leave you with the Infonox support and resistance table, and I'll speak to you next week. Thank you very much, everyone.